The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is the Wednesday edition, Wednesday, June 6th. And, wow, well, look at that. It was so telling yesterday when buying dried up, selling dried up, and there was this, in the Dow that is, and there was this narrow range, yet the S&P was showing strength, together with a number of other factors that we were going to get a very strong, at least we can call it a pop at this particular point, but it could turn out, my assessment, what I said to subscribers this morning is that either it's going to last a little longer than everyone thinks, or if there's a failure, it plunges, and that would be horrible. But everything about what we were looking at said that there should be a pretty good rally, and I'm going to explain what I'm looking at. And I've got my Master Trader series coming up. This is going to be it's really, I call this a Master Trader series, but it's really, I like to call it it's a webinar, an all-day webinar on the ChapmanWave and on various chart formations that repeat over and over. Now, I'm going to show exactly what I'm talking about. Let me just run the numbers quickly. The Dow's up 174, made a low of 12,069 just 2 days ago. 1235, whoa, 12,035, I forgot to renotate that, 12,035. The beautiful candle. I'm going to be talking about candles in this webinar, how they can give you so much information. It's a candle that I spoke about in my last, this is a full Master Trader series earlier this year, a live one where it was at Babson Executive Conference Center here in the Boston area in Wellesley. And I introduced a technique that I'd worked on for quite some time. I always work on these techniques for a long time, 6-8 months, try them out, check them out, see if they work. And it's what I call a silent doji. And this silent doji is now being accompanied for this particular webinar with another technique, which I call the silent top. So these are techniques that I'm going to be discussing in great detail in this webinar. And for that, you don't need the ChapmanWave. You need nothing. You just need to know a little bit about chart patterns and candles, but you don't even have to know names of candles. It's just the doji is the one that I love. And what we were looking at, if you look at the top that was made at 13,338 in the Dow on the 5th, after that we got a particular doji that I happen to like very much, and the market pulled back sharply. And then we've got this low bar on the 4th of June, and that says that you could rally. Now I'm going to show something. Let me run the numbers, and then I got it out the way, and we can just continue with our analysis. 877-927-6648 is the number to call. Now I'm going to be sending out today, late this afternoon. I'm actually sending out the notated and articulated program that outlines everything, what we're going to be looking for. In fact, right here, I'll show you. I think this is the correct one. Yeah, this is the core techniques to be studied. Cup or V-shaped patterns, arch or inverted V-shaped patterns, left side, right side, price time match, ChapmanWave inside wedge target price, channel lines and ChapmanWave inside tracks, sell repellent and buy propellant zones. This is what I showed distinctly this morning. Very important. Moving averages, the MACD and stochastic. Which moving averages, you get the free course on the webinar that I did a little while back on moving averages. You get my service for a month, and you get this is really a bargain, I think. Divergences between price and technicals, the doji and the silent doji candle. But I also do something else. I'm going to include, as I talk, I will be talking, because you can review the whole webinar for 30 days. I mean, in 30 days you can go over these different patterns. I mean, talking about the round numbers at tops or bottoms, intraday trading techniques, phantom peaks, time frames, single leg A-up failures. Those happen a lot. Alternate wave counts, very important in the ChapmanWave. The restart. People always say to me, wait a minute, we've got a buy signal, but then we got taken out. Well, That's part of the restart process. Sometimes things don't just take off like they did today. You come back and have to have a retest. It's the retest that's important. Then there's a ChapmanWave cup and ladle breakout, divergences and the implications, candles, doji, long-legged doji, and the ChapmanWave silent doji. Why there's a down arrow and then a carrot for the right arm extension. The dreaded H and the M patterns. Now, all of these sound like, oh my God, how are we going to take it all in one session? It's because we discuss it. The ChapmanWave is a waveform that never sleeps. Each higher peak is counted and each lower trough is counted. So you're constantly looking at these patterns. It's just explaining them. The Eiffel Tower, the one that goes straight up and comes straight down, looks like a capital A, uppercase A. And then the single leg A up failure. Then the falling axe, you know that wedge, that expanding wedge that expands and gives you a price projection to the upside, usually 1-to-1, or on the downside, and gaps, island gaps, and gaps that you should just ignore, and how long you should ignore them for. The inside wedge target line, inside track sell buy modes, overlapping wave, powerful configuration, right arm extension, right shoulder failure, rogue wave, plumb line. That is so important, the vertical midpoint marker. Let me just explain to you very simply how this works. Look, we've got the Dow up 184. You can see in the weekly chart there's this large arch formation. You can see there's an inside wedge. So far it's used this single line down, this dashed line, if you're looking at Tiger TV, as a propellant line, a support line. Every time it gets there, it tries to rally. The target would be, if it was to break down underneath this line, would be 11,457, which is the 200-period moving average, but a left side, right side price time match going all the way to the end of July, beginning of August. That would say that the 11,231 would be a price point were we to break down, close underneath, decisively underneath 12,000 would be the price. So, okay, now let's go to the S&P. SPX.X, same thing. Pulls back, has a very nice break. It's up 20 points at 1305. So the horrible candle of the 1st of June, where it went from 1309 down to 1277, that 1309 area would be the target. But 1313 is the 200-period exponential moving average. And so far, the W formation in the MACD and the rising stochastic, I'm going to be teaching about that, is very important. It looks good. So that says support at this point at 1306 would be at the 1298 to 1297, 95 area. Should be good support. Let's go to the Qs. 1, 2, 3. 1, 2, 3. The Qs are right now up 118 at 62.13. Gap away. Now it turns out that this gap is actually an island reversal. And I'll be talking about those. Now, the Qs often have island reversals, and they can be very powerful, or they can fool you. So we're going to see exactly what happens. Why? Because there was a left side, right side price time match to the low of 59.66. It went down to 60.04. It missed it by, what are we looking at? 20 cents. 40 cents, and it's rallying and it's broke above the 200-period exponential moving average. It says that if the Qs actually rally right through until Friday afternoon, Monday, above 63.15, that means that it is a very powerful move to the upside, and it could be a little longer lasting than the 2-3 days that has been discussed. CNBC constantly, people are saying should have a quick pop and then go to a lower low. But look at this. This is that channel that I'm talking about. The channel is so important. Look what I showed subscribers this morning, yesterday and this morning. I showed this channel that the red line, you break under that red line, it's very negative. But the green line is what I call the propellant area, the buy zone propellant area. That says it can rally to where the 9-period exponential moving average, and it's just gone above it at 12,320 in the Dow. That says that the next area of resistance is this entire, what was a repellent zone, all the way to, depends on which day, but I've already put this in. You can see you've got an up channel that I already drew in this morning, and it has resistance by tomorrow around about the 12,000 390 to the 12,450 area. So that's using a very simple technique. It's the channel. It's using this inside track and the outside track over there. Break above it, break above the green line, and that's going to be very positive. So we know exactly what we're looking at. So we've got a break coming up. Gold is up. GLD is up $1.71 at 158. Gold is up 21 at 1638, and bonds are down 1.5. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave...
Hi, folks. We're back. Basil Chapman. Sorry for the little glitch there. I just suddenly lost some sound there. Okay. Now, let's do this. We've got a caller. We've got, let's see, Mike in New York. Hi, Mike. How you doing?
Good. Lulu's earnings are tomorrow, so I think it's timely we look at Lulu. And on the monthly, there's this doji candle. Does that mean anything? Is that meaningful? You know, in terms of...
Yeah, there are two dojis. Now, actually, in my webinar coming up on Friday, I've got... there's a particular chart that I talk about, and I show this very what I call the long-legged doji right here that we've got. And what this says in the monthly chart, folks, we're looking at Lululemon, L-U-L-U. It's Lululemon Athletica Inc. Now, what's fascinating about this stock is that if you're looking at Tiger TV, you will see right now, Tiger TFNN 1, you will see that there's some letters here, like there's an A- that says 60.70. That's when it pre-split. So that is really something. So now what we're looking at, it goes from $2.64 down at, this is on the 20s, that was in March of 2009, and it's run all the way up to 81.09 May of this year. That was last month. Now what's fascinating about the stock is that if you have... if you look at this long-legged doji, you'll see that the stochastic is pulling back, but it's still at 88% in the monthly, and the MACD is making this M pattern. And so now these are techniques I'll be talking about on Friday. And when you get the MACD still positive, it says that the price has to drop very sharply for the monthly to go negative. So at this particular point, regardless of what the earnings are, the support that has to hold is 65.51, the 9-period exponential moving average. The resistance is, of course, the high of 81.09. But the long-legged doji says that there's a very good chance that if it was to rally, or if it was to drop sharply, at some point very soon, within 2 bars, it should try an attempt at least to get back towards the wick, which towards the candle. In this case, the candle's the body between 74 and 72.64. So it's trading at 71.80 right now. So it says that if it was to drop, at least the wick of this candle from last week, all the way from the 66 up to the 70 area, will somehow be tested. So that's number one. Number two is it says even if it was to spike above, it'll be coming back and testing that candle within 2 to 3 months, 2 to 3 bars. So that's that. So far, the monthly is not giving us any clue other than to say it's trapped in a very wide trading range, and that trading range should narrow after an initial spike either up or down. Here we go. Weekly chart. Weekly chart says the MACD is very negative. The stochastic is negative. It's trying to turn up. And it made the pattern that I call a cup and ladle, it's called the ChapmanWave cup and ladle breakout. What does that mean? The most famous cup and handle formation is the one where it goes into the cup, it retests the left side high of, in this case, 64.49 back in the 22nd of July of last year, and fails to do that, and it pulls back and it makes a handle. There are different ways of looking at the length of the handle. I happen to hate the pattern because I don't dislike it, I hate it. Because by the time it settles and then breaks out, what normally happens is that the handle, it breaks above the previous high. In this case, it would be 64.50 and higher. But then it comes very quickly back. That's why I don't like the cup and handle. I love the cup and ladle because it takes you not only to a new high, it takes you invariably to a leg D and then a peak D. It turns out that I've also got something that I'm going to be teaching on Friday. It's very rarely do I need it, and it's a pattern that says when you're making highs that are just fractionally lower, and then you make a new high, that's very important. But if it's only fractionally high and then it pulls back sharply, you've got to be careful. And that's this pattern right here that it made back from March the 23rd of this year. In the weekly chart, went to a peak C, then pulled back under the 9 EMA. It didn't close there, went above it, and it made the all-time high of 81.89. So now this is what I'm looking at. If the earnings are very, very good, if it gaps up, it needs to stay above 81.09 for more than 2 to 3 sessions. That's daily sessions. The weekly chart, by next week, if it fails to hold on a close above 81.09, but instead it comes back and it goes anywhere into the 75. It's at 71.77 right now. If it goes anywhere between 75.50 and I would say 75.50 and 72.50, there's a real good chance that that's it, it's done. Now, if it gaps down, that's going to be very important because it says it's going to gap down, it's going to go below 66.01, it'll break below 66. If it closes below 66, I would say to you that any rally after that would be a short. Now, the daily is saying, something fantastic is going to have to happen here because there are two patterns that are very obvious. One is it's got a potential cup pattern, which says if it breaks over 74.63, then there's really a good chance it's going to test the 81 area. If it breaks down, that's the ChapmanWave dreaded H formation. It says it's going to be a real quick run to 62.84 to the 61 area. What might be helping it at this particular time is that money managers don't want to lose out on this. They've been in it for such a long time that they're going to try to get, even if it drops, they're going to try to get it back up to start getting out. That's number one. Number two is the patterns that are forming, to me, say that there's a really good chance that the apparel area, and Lululemon is in that area, is starting to show a lot of wear and tear, dare I say it, because certain stocks in that sector have had it. I mean, we are short of my opening call. We've got a 20% gain on a stock that today is down when the general market is up huge at 1.6, 1.7%. And that tells me that that sector is highly vulnerable. So we got a break coming up. I'm just going to take this break and I'll give you exact numbers to watch, and then you should be able to follow that. Is it tonight that's coming out, this afternoon?
No, I think tomorrow morning.
Tomorrow morning. Okay, we'll be ready.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capabilities. capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Let me ask, Mike, are you in any trade on Lulu at this particular moment?
Yeah, I'm presently short some,
Okay. So this is the way I would look at it. If you are already short, I would, first of all, you will know immediately whether you're right or wrong. But it'll be pre-market, and you won't be able to do anything until 9:30, correct?
Right.
Okay. Everything, I know that you tend to also look further out. You're quite prepared to add to a position if your analysis is correct, and you're also prepared to get out if you feel that you were wrong. My assessment of the monthly chart, based on the weekly, the daily starting to break down, the weekly also showing some signs of technical wear, but not price wear. In other words, the technicals are very poor. If you looked at the price, I would have, if I was just looking at the price and I sometimes do this, I put my hand up and I cover the price, I look at the technicals, I would have said that from the top of the MACD and stochastic high, if you're looking at Tiger TV, folks, this is the weekly chart, the one in the middle, left side is daily, middle is weekly, right side is monthly on Lululemon. I would have said that the price is way below the all-time high, or whatever the high was, what it was, 81.09, and it only went down to 66. Well, that's nearly 20 points, but it's not based on that monthly chart, which is spectacular. Everything about this says that it should be taking a time out. In fact, it could be making, like many of the stocks I'm looking at, a hat-trick top, meaning if Lululemon doesn't make a new high, even by 1 penny this month, but makes, instead it starts to decline, the daily is moving to the weekly, which is at peak D, and the monthly will make a peak E top, and that will be a hat-trick top, meaning a top of price and consequence in time. So I'm kind of with you. I'm inclined to think that unless there's a new high, Lululemon is going to start to deteriorate. Things are going to look worse as we move into the summer. I would have a price target if it closes under 65 in June. I would have a July-August target round about the 53 to the 48 area. So let's see what happens. But you're in the position. I would not add to the position if there is a big spike up yet. I would do it maybe. I would wait for a curve on the way down and let it get back to the 78 area if it goes over 81. Hope that helps you.
Yeah, great analysis. Okay.
Thank you very much. I appreciate your call. Now let's do this, folks. I'm going to go to the GLD, because the GLD is acting very well. Now, if the euro and the GLD start to rally with the general market, we've seen that scenario before. So we're going to look at the GLD, and the GLD stopped right at the 200-period exponential moving average. It's trying to get back into this major up channel, which it broke out of for 1, 2, 3, 4. This is the 5th week it's been underneath the up channel. That says to me that there's a good chance it's going to try to get there, and it's somewhere around 163. I said 158.84 right now. 163 to, let me just see exactly where. Yeah, 163 to 165, there could be tremendous resistance. If gold goes right through that, we've got to be assessing other things. We've got to say, hey, wait a minute, the dollar is making a peak E in the ChapmanWave, but it's still holding really well above the 9 EMA. MACD's turning down stochastic. This is where you could start to see a breakdown in the dollar, but it hasn't broken down on price. If by tomorrow's Thursday, now I will be doing Kate Stoltz's show tomorrow between 11 and 12. Then I won't be around because the next day is my all-day webinar. There's still time to get in, folks. I'm sending out this afternoon the pre-prepared first hour and a half of 2 hours, and then we're going to go live. So that's going to be you. I want you to read that beforehand. Now look at this. If the dollar makes a peak E here, that's in the ChapmanWave, that's the 5th highest peak. That would be at 83.54. And starts to break down, it starts to come down. It only breaks down if it closes decisively underneath the bar of the 28th, this is the index, of 81.83. Let's call it 81.50. If the dollar breaks under 81.50, you can expect the EUR-USD, the euro-dollar, to actually rally even more. Well, it's trying its best, but it's not doing very much. I'm fascinated that the dollar hasn't yet really tanked. The euro hasn't really spiked. It could still do that, but it really needs to get above that support. Remember when I was showing you that chart that I said left side, right side, which I'm going to be teaching on Friday, the left side, right side price time match. It went 2 bars later, and then it touched the left side in the 1.26 area. Then it broke down and went to the 1.2287, I believe, on the 1st of June. Now it's running. It's way oversold. The rally can go on for a little longer, and if it does, the area of 1.26 to 27 is going to be really critical. How it can handle that is very important. So the gold the gold is saying it can still move higher because the GLD on the daily chart is only in leg C, gapped up. Leg B. And it stopped right there at the 200-period exponential moving average. But the MACD is at 87%. That is good. I mean, that's what you want in the ChapmanWave. You don't want it to do what it did back on the 23rd of February, to break into the 80s in the stochastic and then fail. It cannot make that inverted V shape. It has to hold, and so far it looks from the MACD and stochastic, the way they are performing right now, this looks like gold has a little bit more room to the upside. So that was very important. Now let's go to the TLT. The TLT is making, I mentioned on my show on Monday that it was a parallel wave count at 130.38 on the 1st of June. If it made a lower high bar, that would say to me that I've got to consider it leg F/B, and if the stochastic fails and goes under 80%, it's at 83%, with the price closing decisively under the 9 EMA, especially if it goes under 125, bonds have made a short-term top. And you've got particular candles that I'll be just discussing in great detail on Friday, which are really important in my work. So that's going to be important, but I only have leg C. I believe I have to call it leg C still, perhaps peak C in the weekly chart. That says there's still room on the upside for bonds to move. Now let's go to the TBT. I missed a buy on the TBT. I can't believe it. I had it right there on the 4th of June, and I just took it off. I said it could rally right here, and then I said we won't make a trade, and it would have been a really nice trade. It's still not too late for a trade. Where would it go to? You see the way that I'm using these channels? You see this inside track? That says that the TBT, if it breaks above the repellent zone of 1611, it could test the high coming up in the next day or two of 1645. If the TBT breaks into the 16.60s, TLT, the Lehman 20-year T-bond fund, is coming down, and this thing can go towards the 1690 1790 to 17 to the gap right there, 1740 area. So I'm watching this really closely. So that's that. And let's see, I want you to look at, we spoke about crude oil. I'm going to the end contract. The end contract. Now, crude oil has done exactly the same thing. Trough F in the Chapman wave. The stochastic made a W formation. The MACD's trying to turn up. You had almost a volume, I call it a volume climax. It was a day before, but I watch these really closely because when you get this sort of thing, you've got to be careful that there isn't a release to the upside in price. And that would say that crude oil has a chance, if it closes over 87, to go to the 87, to the 88.62, and then the 20-period exponential moving average, 90.40 area. So this is a very important moment. This is a very important moment all around. You saw that the down channel in the Dow has this right side move to the upside to the down channel resistance. Now there were some questions in the debt. Apple, AAPL. In Apple, we've got a rally going on, and the rally so far is very strong because the weekly chart is held. It has not gone down to the support level of the up channel that it was in right up until it broke out back in the week of the 10th of February. It went to a peak F top at a 644 round number high. Oh, I'm going to be teaching about these round numbers. And then it pulled back, and it pulled back to 528.66 the week of the 18th of May. This is what I call a gray leg A. Why is it gray, a different color? Because it means it's in a counter trend rally until it can break above the 644 high. Everything below it is just a counter trend move. It could be great. It could be this is not a derogative term. It's an explanatory term. And what's happened is, so the question was, where's Apple going to? Good question. It's going towards the 576.85 200 period exponential moving average resistance. If it takes that out by this afternoon, let's say, there's a chance that it could go to, it could even try to retest the 581.50 area. Wow, that's 9 points. Well, one thing at a time. First is filling the gap, and the gap low is 577.50. So that would be the next thing. So 576.85, 577.50, and if it takes that out, you've got to consider that it can make leg D up in the 120-minute chart. Oh, and I had the 330 on the 4th of June target. Didn't get there. So that's Apple. Then I had another question about, I wrote it down. I had an email, and the email said, hey, the IYT has been failing. Well, I don't know if the transports are anywhere near for Dow theory. I don't use them. I've never used them actually for Dow theory. I've always chuckled because when Dow theory gave a confirmation, it's invariably a down or up. It was invariably we were about to get a trend change. But what's most important is that the Dow monthly chart has made a peak F at 101.60, pulled back sharply to 70.82. That candle, that monthly candle, cannot also be a leg A. That has to be an A because you've got to establish an uptrend first. So A went to 96.22, and it's going to be really important if the transports are able to break into the 92.64 in the IYT. This is the iShares, are at 89.72 right now. If they can get to 92.64 by, say, Monday, we might be looking at something that has much more in the way of legs to the upside than just a bear market counter trend bounce. Now, to put that in perspective, remember I was talking about my three bears, VIXI, Dolly, and Bondi? That's the volatility index. I said, good chance that we're making a peak D in the daily, which I believe 27.73 is a peak D because we've broken sharply low. It says that 22 to 21 to 21.30 will be very important. A close below that will say the volatility index now has legs to move down. The weekly chart is making leg C. It'll be a peak C if all of next week there is no new high above 27.73, but instead it breaks under on Friday at 4 o'clock. If the VIX index closes under 2150, that'll say, aha, something's happened here. Watch that stochastic because it's at 84. If it goes down to 79, it says we could have an even stronger move to the upside. Parameters are very clear. That's the reason why I think selectivity to the upside is very important. After this initial short covering and everything, we want to see where the Dow comes back, because if the Dow, let's just do this, make it very clear. If this turns out to be a single leg A to the upside, you know what that is. That means that there's a new high tomorrow established above whatever the high is today, and by Friday there might or might not be a new high, but there's a very sharp turn down, especially if the 12,463 200 period exponential moving average is not pierced. Is a very sharp turn down. That turn down breaks and the Dow starts to slide under 12,230. That would say, it's all over. And that's maybe when bad news comes out. I don't know what it is. Doesn't matter. Because at that point, you should see the volatility index break back up into the mid-20s. You should see bonds come right back. You should see the dollar actually start to climb into the... There's that long-legged wick in the long-legged doji with the wicks quite wide. That says that, yes, if there is a little bit of a bounce, if it closes above the wick, the body of the wick, okay, make it clear, if the dollar index in the next 2 days closes above 83.11, it's at 82.51, it says be careful, because the top of the wick is going to probably be tested. And that'll put pressure on the market, put pressure on the Dow. Meantime, back at the ranch, we're looking at just a beautiful, beautiful rally right now. IYC, this is a chart pattern we need to look at. This is the Dow Jones U.S. Consumer Cyclical iShares. We'll take a look at that in a moment because it is very important in my work. Meantime, Dow's up 213, S&P's up 23, Comp Index is up 57 at 2835, Basil Chapman 877-927-6648. I'll be right back.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful ChapmanWave. Well, Basil has just announced a one-day online master trader course where he'll explain his ChapmanWave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi folks, Basil Chapman. We were looking at, there's a lot of signal. I can't believe it. Time's flying. Oh, well, Larry Pesvento's coming up, and he'll be following through with all these different chart patterns. And then we've got Dave White at 3 o'clock. I'm not sure who's doing Tom's shows after. I don't know if Tom's doing it 4 o'clock to 6 because I believe he's at a convention right now. Stay tuned, folks. Great programming. I will be back tomorrow at 11 to do Kate Stolter's. So she's down there. Kate Stolter's down there. And so that's tomorrow, Thursday. What I'm looking at here is that the IYC, the iShares of the Dow Jones U.S. Consumer Cyclical Index, the monthly has held the 9-period moving average of 76.68. The weekly has broken this up channel, tremendous up channel support, and it's just kind of sitting there. The technicals are not good, but there's a V-shaped turnaround in the weekly on balance, weekly stochastic. That says if in the next 3 days the IYC is able to break into the 80.52 area, it's at 78, 73 right now, that'll be very positive on the short term, but it's still technically weak. But if it breaks down by early next week under 75, it's a real problem. Meantime, back at the ranch, the daily is making this left side, right side price time match. Then it made a dreaded H retest, and with the higher technicals, and that says, hey, this thing could bounce, and it could retest the 80.05 level. That's going to be very important, 79 to 80.20. That area is going to be very important. Now, a couple of things as I'm about to sign off. In the chart patterns we're looking at, I've always said, make it as easy as you can. If you're looking at something like, say, the volatility index, if the volatility index over the next few days, which is the VIX, is trading at 23.24, down $1.45, it's still high. It's still way too high in the 20s. If it breaks under 21.50 and goes to the 21 area, this rally will continue. I'm pretty sure. If instead there's a sudden pop-up to 24.50, it's at 23.22. If there's a pop-up to 24.50 to 23.20, be careful. This market's going to become vulnerable again. But the market is deeply oversold. Any bounce is absolutely, I mean, how could you not expect it to do that? I've got my parameters. My subscribers know exactly where we are. This is what we're looking at. There's a mini up channel in the Dow chart. If you're looking at Tiger 1, you can see the deep, deep down move. Very unusual to have the Dow take so long to come down in this decisively negative fashion. So this is a relief rally. If at any point next week the Dow is able to climb above 10,620, then you're looking at something very different. But at this particular point, we have to consider it a counter-trend bounce, and we're going to go from there. Now, here we go. Here's something else that I do. In the, where I just wanted to go to, in the futures. If you're looking at my futures chart right here, this is the 10-minute on the left. This is the 120. This is what I sent to subscribers this morning. What we're looking at is that the 9-period, that white line, that 9-period exponential moving average became support. We've gone from an E to a potential F/B. We've broken in a shorter time period the left side, right side price time match that says, oops, be careful, because the next one will be at 8:30 on the 7th of June in the 1319 area. The E-minis are right now at 1306.75. If there's a breakdown and the E-minis close under 1287, that says rally could pretty much be over. So the parameters are already quite clear. Thanks for being here. Don't forget, there's still time. Oh, Nick and Pass want to look at Pass. I just missed Nick. I didn't see that in the den. Pass is acting very well. It can go to 1950.
Are you looking for a precision edge in the market? Something that can